Hey everyone, welcome back to Corporate Decoder. Today we're diving into WEC Energy Group's latest filing, and let me tell you, it's not just another boring report. This report actually has a couple of things that are extremely important for investors to be aware of, so buckle up. This is an 8K filing, which is basically a snapshot of important events. This one is dated April 4, 2025. It's like a quick update the company is sending to the Securities and Exchange Commission, or SEC for short. The main point of this filing, it's about what WEC Energy Group will be saying to investors in upcoming meetings. They're sharing the presentation slides they'll be using. This is called Regulation FD Disclosure. FD stands for Fair Disclosure, FD stands for Fair Disclosure, FD stands for Fair Disclosure, meaning they need to give everyone access to the same information at the same time. Think of it as preventing insider trading by making sure everyone's on the same page. The important piece of information is contained in Exhibit 99.1, which are the presentation slides for the meetings. These slides are key because they give us insights into what the company wants investors to focus on. What are they bragging about? What are they trying to downplay? Let's jump in. Now, let's be honest, this filing itself isn't packed with juicy financial tables like a 10K or 10Q would be. Those are quarterly and yearly reports that show a lot of numbers and metrics, but we do have the slides in it. Since the actual presentation slides aren't included directly in this text, we have to make some assumptions. Typically, companies use these presentations to highlight positive results, showcase future plans, and address any potential concerns from investors. They will talk about how the company is doing, its goals, and how it plans to achieve these goals. Let's imagine these slides cover a few key areas that would be expected, so we can show the viewer how we would look at the data and what it could mean. First, imagine a slide focused on earnings per share, or EPS. This is a key metric showing how much profit the company makes per share of stock. If the EPS is up compared to the previous year, that's generally a good sign. It means the company is becoming more profitable. If it's down, that could signal trouble. Next, picture a slide about capital investments. These are the big projects the company is investing in, like new power plants or infrastructure upgrades. These investments are crucial for future growth, but they also cost a lot of money. It's important to see if these investments are paying off or if they're just draining resources. Then, what about a slide addressing regulatory matters? Energy companies are heavily regulated, so any changes in regulations can have a huge impact. The slides might explain how the company is adapting to new environmental rules or dealing with rate cases with state regulators who decide how much companies can charge. Finally, there's probably a slide on dividend policy. Many investors own WEC Energy Group stock specifically for the dividend, the regular cash payment they receive. If the company is increasing the dividend, that's a good sign of financial health. If they're cutting it, investors will get nervous or cave now for a deeper look into the numbers they would present. First, we will talk about revenue growth. If WEC Energy Group shows healthy revenue growth, it means they're selling more electricity and gas. But is that growth coming from more customers, or are they just charging existing customers more? It makes a difference. More customers usually signal long-term health. Price increases could cause backlash or regulatory problems. Operating expenses. Are the expenses rising faster than revenue? If so, that squeezes profits. Maybe they're spending too much on maintenance or their fuel costs are soaring. It is important to know where the money is going. Net income is the bottom line, the actual profit after all expenses. It's important to see if net income is keeping pace with revenue. A growing company should ideally see both rising together. How much debt does WEC Energy Group have? Utilities often carry a lot of debt because they need to fund big projects. But too much debt can be risky, especially if interest rates rise. So we need to be aware of the long-term debt that a company has and track it and compare it. Looking at these potential slides, here are some important trends we would be looking for. One is the company consistently meeting its earnings targets. If they keep falling short, it's a red flag. Are they managing their expenses effectively? A well-run company should be able to control costs even as it grows. And is the company investing wisely for the future? Look for projects that have a clear return on investment and align with long-term trends, like renewable energy, Upleague bulk of Renoshi League, renewable energy, ALFD. Now let's zoom out and talk about WEC Energy Group as a whole. They're a major player in the energy market, serving customers in Wisconsin and other states. They're basically in the business of providing electricity and natural gas to homes and businesses. They are a big operation, so they are impacted by large market trends. One thing that might be interesting is how they are dealing with the shift to renewable energy. The world is moving away from fossil fuels, and energy companies need to adapt. Is WEC Energy Group investing in solar, wind, and other renewable sources? Are they retiring their coal-fired power plants? Their actions in this area will determine their long-term success. Another important thing to consider is the regulatory environment. As mentioned, energy companies don't operate in a free market. They are heavily regulated by state and federal agencies. Changes in regulations can have a huge impact on their profitability. So what's the overall story here? Is WEC Group a well-managed company that's adapting to the future, or are they stuck in the past? Are they making smart investments, or are they wasting money? Are they prepared for the challenges of a changing energy landscape? Ultimately, this 8K filing is just a small piece of the puzzle. It's up to investors to dig deeper, analyze the information, and make their own informed decisions. But by understanding the key issues and trends, you can get a better sense of where WEC Energy Group is headed. Or WEC Energy Group, here's my take. It seems like WEC Energy Group is probably trying to paint a positive picture for investors, as most companies do, right? It is really important to look for what is behind it. The most important trend for them is how they're adapting to the changing energy landscape. It is important to see if they are investing enough in renewable energy and managing the transition away from fossil fuels effectively. If they are not keeping up, that's a major red flag. They operate in a regulated industry, so regulatory changes can make or break them. We'd need to keep a close eye on any new rules or policies that could impact their business. So is WEC Energy Group a buy or a sell? That depends on your risk tolerance and investment goals. But based on what we've seen here, it seems like a company with both opportunities and challenges. It would be important to research and analyze the financials and industry trends to make a smart decision. Thanks for watching. If you found this corporate decoder breakdown helpful, give us a like, drop a comment, and definitely subscribe for more deep dives into the world of corporate filings. We'll see you in the next one.